Hello and welcome back to Flood Zone Ahead. Today I want to talk about the National Flood Insurance Program. And the National Flood Insurance Program was put into place in 1968 with the passage of the National Flood Insurance Act. And this act essentially put in place a program that would provide federally subsidized flood insurance for property owners, residential and business property owners for areas that had higher risk of flooding. And a major reason that this program was put in place was because prior to the National Flood Insurance Program, private market insurance companies were the only option for people who were looking for flood insurance. And when it comes to flood insurance, for a private market insurer to take on that type of insurance, typically the margins are just not going to be the same as it would be for other types of insurance. And what that would mean is that typically people who are purchasing flood insurance are going to be in areas at higher risk of flooding. So that means that the majority of your policy base are for people who are having higher risk of flooding events. So the margins and returns for those types of properties are not going to be as good if you're looking at it from an insurer's point of view. Additionally, you also had, after the 1945 end of World War II, you had the baby boom, basically, where families were now leaving cities, urban areas, moving into suburbs, moving into green spaces, moving near water, rivers, lakes, oceans. So you had a lot of people moving to these areas that indeed are beautiful but do carry higher risk of flooding. And also you had people building in these areas with very little foresight for flood risk. So you had areas that were getting devastated by massive floods. For instance, you had the Buffalo Creek flood in West Virginia in the 1900s, and a list of other types of major flooding events that were causing massive amounts of damage. And since the private market was very hesitant to kind of cover these risks for property owners, many times communities would end up having to go to the federal government to request assistance, so federal disaster assistance, to recoup their losses. And this proved very costly over many years. You had billions of dollars that were being spent on rebuilding communities that were damaged by flooding events. And then you had people who, once they, recouped their loss, would start rebuilding in the same exact areas, in the same exact ways. So this was a bit of a circular sort of cycle where you had people who get flooded, they get a federal assistance from the government, and then they use that federal assistance to rebuild in the same exact locations in the same exact ways that were putting them at risk in the first place. So the National Flood Insurance Program, its main objective was not only to provide federally subsidized flood insurance for people, but also to encourage less risky development in flood-prone areas. And one of the ways they did that was by implementing building codes as well as flood mapping. So flood mapping was used basically to identify areas of higher risk and then implementing building regulations in those types of higher risk areas. And higher risk areas could be on the water directly, they could be adjacent to waterways, whether it's a creek or a river. It doesn't even have to be necessarily near a source of water to be considered in a floodplain. So the National Flood Insurance Program set out to reduce risky development. It set out to essentially provide a different alternative for people who wanted to have insurance to mitigate their risks. And it also provided a framework for people to use to identify risk as well as build responsibly in areas to mitigate future losses. And the program became even more relevant, you could say, in 1973 with the passage of the Flood Disaster Protection Act. And what this act did was basically give federally backed lenders the ability to require flood insurance for properties in these designated high-risk flood areas. So if I go to take out a mortgage or a loan on a property that's in one of these high-risk flood zones, then that lender would technically be obligated to require flood insurance on my property to protect their investment. And the National Flood Insurance Program is currently part of the Federal Emergency Management Agency, also known as FEMA. And FEMA actually didn't come into existence until 1979, so the National Flood Insurance Program actually predates FEMA. So now FEMA is the one that works on the National Flood Insurance Program in terms of doing flood risk mapping analysis, providing federally subsidized flood insurance and enforcing building regulations throughout the country on a local level. So when it comes to the National Flood Insurance Program, it doesn't mean that every single city or every single county is automatically in that program and subject to those requirements. A unique part of the National Flood Insurance Program is that it is an optional program to be a part of. And by optional, I mean that your community, so whether it's your city or your county, would have to agree to join the National Flood Insurance Program. And by joining the National Flood Insurance Program, a community gets different benefits from that. So the first and foremost would be that they can have flood mapping done in their community. So if your community is not part of the National Flood Insurance Program, then you will not have any official FEMA flood maps that are done. Another benefit of being part of the NFIP, the National Flood Insurance Program, is that you would be eligible to have flood insurance through the program. So if you're in a community that does not participate, you cannot purchase a FEMA flood insurance policy through this program. So that does cause issues with certain types of federal lenders, essentially, that if you have a lender who is going to be securing a loan for your property and you're in a community that does not participate in the National Flood Insurance Program, that will cause issues because there will not be any flood mapping and there will not be any FEMA flood insurance available. And some lenders will just not issue any loans or close on any loans in an area that is not mapped or is not part of that NFIP. And it's important to keep in mind that the maps that FEMA through the National Flood Insurance Program make are regulatory flood maps. So that does not mean that they are predicting where it's going to flood or where it has flooded in the past. They are used solely for regulatory purposes and to communicate a general level of risk. That leads into the question of mandatory purchase requirement for flood insurance. So these FEMA flood maps are being used by mortgage lenders to decide who is going to be required to carry flood insurance. So if I purchase a property with cash, no financing, no loan on it, there's nobody that can say I would be required to carry flood insurance on that property. The only time there can be a requirement for flood insurance would be when you have some type of mandatory, requirement from a lender. So federally backed mortgages and loans are always going to require in those higher risk flood designations, whereas private loans and private mortgages are not necessarily federally required to require that insurance. However, most of them are going to be requiring that type of insurance in those high-risk designations to protect their investments. So whether you currently own a property or whether you're looking to purchase a new property, I would always recommend familiarizing yourself with the flood risk for that area that FEMA has designated. There are also other resources that you can use to get an idea of flood risk, especially if an area has not been mapped by FEMA or is not part of the NFIP. So there is something called floodfactor.com. So Flood Factor is a private organization, I believe it's First Street Foundation, where you can actually get a 1 out of 10 rating for flood risk called a flood factor. So that's also a really good website that I would recommend using. Even if a FEMA flood map might not show a high risk zone, I would also check that flood factor because it does take into account other types of variables that the FEMA map does not take into account. So it can also be used if you're just more concerned about general overall risk. But when we're talking about any regulatory purposes, whether it be insurance requirements or building requirements, the FEMA flood maps are always going to reign supreme when it comes to those types of things. So if you guys are interested in flood risk, flood insurance requirements, consider giving my channel a subscribe and liking this video. At Flood Zone Ahead here, we're going to be talking about a lot of these emerging issues that are popping up throughout the country. And lastly, I do want to say that I am a certified floodplain manager with the Association of State Floodplain Managers. I am not an insurance agent. I am not a real estate agent. I am not a lender. So before making any decisions or before identifying any risks for properties you may be investing in, I would always recommend to speak with your insurance agent, speak with your real estate agent, speak with your lender, and I would also recommend speaking with the local floodplain administrator for your area. So the local floodplain administrator would be somebody that implements NFIP requirements. So I would always recommend contacting these different offices to make sure that you have a full understanding of the risk for an area and that everyone is on the same page. The floodplain administrator for most communities is going to be located in the building or zoning department. So always get the best information that you guys can. This video is for educational and entertainment purposes only. Thank you guys so much for watching, and as always, stay dry.